Good morning or good evening, depending where our listeners are tuning in. First up, North Korea released new state media photos showing Kim Jong Un inspecting a largely completed burgundy-colored submarine hull the regime is calling an 8,700-ton nuclear-propelled strategic submarine. They also reported a long-range, high-altitude missile test that destroyed airborne targets roughly 200 kilometers away. Pretty dramatic visuals. What's your read on this, technically and geopolitically?
It's a heavy mix of theater and capability signaling. From the images and state language, Pyongyang wants to convey progress on a nuclear propulsion program and a strategic guided missile submarine concept. Whether it truly has an operational nuclear reactor and an integrated ballistic or cruise missile fit remains an open question. Geopolitically, the timing is key. The hull unveiling and missile test follow the arrival of a U.S. nuclear-powered attack sub in South Korea and a U.S. ROK submarine agreement. So this is both a response and deterrence messaging.
So beyond the headlines, what are the real risks here? Are we looking at an imminent new class of nuclear submarines from the north or more signaling?
The near-term reality is signaling. Building a sealed, reactor-powered submarine with credible stealth and weapons integration is extremely challenging. It takes years of engineering, testing, and blue water experience. But even the prospect raises proliferation concerns, forces neighboring navies to adjust patrol patterns, and complicates deterrence calculations. If Pyongyang actually arms such a platform with nuclear warheads later, that would be a major escalation in strategic stability across Northeast Asia.
And the missile test they touted, high-altitude, long-range targets destroyed at 200 kilometers. How worrisome is that development?
It suggests advancement in high-altitude intercept or mid-course technologies, or at least mastery of accurate long-range targeting at different trajectories. That stresses regional air defenses and shows iterative progress in missile tech. Combined with submarine ambitions, it's a multi-domain signal. Sea, air, and strategic messaging all at once. Diplomatically, it tightens pressure on Seoul, Tokyo, and Washington to coordinate responses.
Heavy stuff. Let's switch gears to markets from geopolitics to GPUs. Transition? Yes, please.
Next segment, markets. Multiple year-end analyses argue crypto faces one of its toughest years in 2026, while gold and silver led 2025's returns and enjoyed a pretty loud Santa rally. Analysts say investors are rotating into metals, silver even getting buzz as a potential 2026 outperformer versus gold and Bitcoin. Why the rotation? And is crypto really in trouble?
The rotation is partly a sentiment and macro story. Precious metals benefited from risk-off flows, geopolitical uncertainty, and inflation hedging narratives in 2025. Bullion's strong performance undermined crypto's hedge narrative. If investors wanted protection, many chose gold and silver instead of Bitcoin. For crypto, 2026 looks mixed. Regulatory pressure, fading speculative froth, and competition from more traditional hedges mean headwinds. But hunters for alpha and crypto will still find niches. DeFi infrastructure, interoperability, or niche L2s if narratives or catalysts reappear.
So it's not dead, just more selective.
Exactly. Think of crypto in 2026 as a boutique market. Broad indexes may lag, but specific sectors can outperform if they deliver real utility or clear regulatory paths. Meanwhile, metals and some defensive equities are the easy, safer trade for many investors heading into the new year.
Short and snappy, like a well-optimized block size. Now, the AI and chip story? On that AI front, reports show billionaires loading up on $2 trillion AI names, and Bank of America flags 6 chip stocks that could lead a $1 trillion chip surge in 2026. There are also calls about beaten down AI names that could bounce back, and a broader cautionary 20-year signal about a long-term reversal. Is January the month to watch?
January can be a trigger. Earnings, guidance, and repositioning after year-end tax moves often set tone. Billionaire buying signals confidence in mega-cap AI leaders. That tends to reinforce momentum. Chips are the engine. If demand for accelerators and data center gear continues, the semiconductor supply chain benefits. But the 20-year signal is a reminder that structural cycles exist. Valuations can be stretched, competition rises, and returns over decades aren't guaranteed. So yes, watch January for catalysts, but build convictions with risk controls.
Practical investing advice delivered with a touch of humility. Any closing thought for listeners deciding between metals, crypto, AI stocks, or the latest shiny chip?
Diversify around time horizon and thesis. If you want safety this year, metals look attractive. If you seek growth and can stomach volatility, select AI leaders and chip plays make sense, but size positions accordingly. Crypto needs narrative revival to broadly reassert itself, so be selective. And always, don't trade your tax plan or your sleep. That's the Tech Pro Investor version of Happy Holidays.
Perfect sign-off. Sleep is underrated. Thanks for tuning into this 5-minute roundup. We'll be back with deeper dives next week or next time the submarine photos drop. The preceding audio summary was created at jesterengine.com, where you can find and verify the original sources.